Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks edging toward a record following a tech-driven rally that pushed Wall Street to its 28th record high of the year. Gains driven by Nvidia's $100 billion investment plan for OpenAI. Also ahead, President Trump advises pregnant women to avoid taking Tylenol, saying its main ingredient, Paracetamol, might be linked to autism. We'll ask the Australian Medical Association what to make of it that seems to lack scientific backing. And we'll get insights on whether Trump's $100,000 H-1B visa could actually end up helping India's job market by reversing the brain drain. Here's a quick check on the markets. The MSCI Asia-Pac Index is climbing toward a record, following a tech-driven rally on Wall Street. U.S. equities, by the way, up for 3 straight weeks on the back of the Fed's first rate cut of the year, now face a key test with quarterly earnings looming. Take a look where we are in terms of Hong Kong stocks. It is headed lower as the city faces its most damaging typhoon since 2018. CSI 300 index also lower right now, down 0.6%. Tech is in the spotlight today with major news on AI and TikTok. Nvidia says it will invest up to $100 billion in OpenAI to support new data centers and other AI infrastructure. The deal sending Nvidia shares higher and helping the S&P 500 notch its 28th record of the year. Meanwhile, a White House official says Oracle will help oversee the recreation of a new U.S. version of TikTok's algorithm under a deal to sell the app to a consortium of American investors. For more on these stories, let's bring in Bloomberg Tech correspondent Annabelle Julius. And Belle, a blockbuster deal, no less, between Nvidia and OpenAI. What more can you tell us about it?
Yeah, this is one that's going to be worth up to $100 billion. So it's a major investment. And we saw the companies on Monday signing a letter of intent and also spoke with sources to try and get more details on the contours it's going to take. So up to $100 billion. But what we've heard is that actually $10 billion is going to be passed across initially. So Nvidia is going to be making the investment in cash. It's going to be receiving OpenAI equity, rather, in return to help them start to build out these major AI infrastructure investments. So the overall goal is to reach 10 gigawatts of power, that much capacity being added. So to put that in perspective, at 10 gigawatts, you're talking about the entire amount of electricity that's used in New York when it's peak demand. So it's a major amount coming online. But then again, as I said, each gigawatt, another $10 billion. That's sort of the shape perhaps we're hearing it's going to be taking. It's certainly very big news for Nvidia. I mean, we saw that reaction in the stock overnight. You talked about that continuation we're seeing in the tech rally, but Nvidia closed around 4% higher. It is also that sign that they're continuing to put themselves at the center of the AI ecosystem in the US, given that OpenAI, of course, is going to be using Nvidia chips and really keeping Nvidia then as a key supplier as well to the business.
And Belle, we're also getting more details on the shape of the TikTok deal between the US and China. What stands out?
It's really coming down to the algorithm. I think we understand, of course, that was really one of the key hurdles in this whole process. The U.S. law in place that mandates the sale of TikTok's U.S. operations says that ByteDance can't have any sort of operational control of the new app in the U.S. But at the same time, China, of course, prohibits the sale of or the export of such sensitive technology. So it's that big question, how is the algorithm going to be used and what shape is it going to be taking? So we're reporting that essentially the technology could be licensed, and that appears what's going to be happening. So a copy of the TikTok algorithm will be licensed to these new U.S. owners. You were mentioning there Andreessen Horowitz, Silver Lake, Oracle as well. But it's really Oracle that's going to see that oversight or have the oversight of the training of this algorithm in the US, and also that oversight of how that data for users, for instance, in the US is going to be stored as well.
And, Belle, speaking of Oracle, the company has named two new co-CEOs.
Yeah, that's right. So this is an interesting move. So Safra Katz has been in that leadership role for going back 11 years, actually, in the role since 2014. But she's going to be stepping back to become executive vice chair of the board. So in her place, yes, they've named two co-CEOs. So you've got Clay Magoric and also Mike Cecilia. So Clay Magoric, he's actually someone who was one of the cloud infrastructure's first employees. Mike Cecilia, he's someone who's come from Oracle Industries. Together, this sort of partnership or this pairing really emphasises the big push that Oracle is making into cloud infrastructure, especially when we've heard from sources that Safra Katz is actually someone who initially was a bit reluctant to go so much into AI infrastructure, but it is a very telling step of the direction the company is taking. And also just to note, big pay packets, $250 million for Clay Magoric, $100 million for Mike Cecilia.
Ain't too shabby there, Belle. Thank you. Bloomberg Tech reporter Annabelle Jewell is there for us. Now, Asian stocks may be heading for a fresh record after the S&P 500 notched its 28th high of the year. Nvidia's investment plans for OpenAI appear to be fueling gains in Hong Kong too, with the Hang Seng Tech Index set to extend its multi-month rally. MLive Strategist Mark Cranfield says positive momentum is building, and he's written all about it on the terminal today. Let's get more from him. It is about momentum. The question is, how long can this last?
Well, if you see a company like Nvidia, which is so fundamental to the global investing, well, it's the biggest company in the world by market cap, it's continuing to make great profits. We'll know a bit more in October when there's more to come. And it is, on a relative basis, it is becoming so expensive. The metrics for some time have looked expensive. People have been saying, oh, how much longer can it go on? And yet it continues to make record highs. It announces great deals like this with OpenAI. Now, because that's happening, you're making, on a relative value basis, even the big Chinese tech names, the Alibabas, the Tencents, these kind of guys, are not looking as expensive as they may have done because you've got these US comparisons. In the background, of course, the China story is looking a lot more solid. The fact that US and China are in this trade truce as well. That's helping a situation. Now, the stocks are down a bit today, but that's more about the typhoon. I know from my own days of trading in Hong Kong, when you've got a massive typhoon coming towards you, you're much more concerned about sealing off your windows and making sure you've got enough groceries to get you through the next 24 hours. So
it's not just about momentum, it's also fundamentals. That's what you're saying. But the likes of Jack Selby, the veteran tech investor, Jack Selby, he says that this is the biggest bubble yet. People are just not anticipating the bubble to burst.
If you look back even to maybe it's the biggest bubble since the internet bubble burst. If you can remember what it was like trading up until the end of that time, people called the top of the internet market several times before it finally turned. Now, investing is a competitive game. Portfolio managers are competing for funds with other people. If you're in the game right now, your returns are looking good, there's momentum. Somebody who steps out of the market right now is at a serious risk, because if we get another 10% gain in the market, they haven't got that to show their investors. They're going to lose funds to somebody else. It's a very brave person who says, this is the top of the market, I'm cashing out everything, and I'm going to wait for the big dive to get back in. If the market continues to go on, with the Fed continuing to lower interest rates, there's certainly a chance that it will go on for a few weeks yet. You are going to be behind. You are going to lose out to other investors.
Ride the wave, they say. When it comes to those AI plays in China in particular, trading in Hong Kong, you got to imagine that it's not just about AI spending and that momentum you're talking about. It's also expectations that the PBOC will cut rates further.
They're in a good position at the moment. They don't seem to be in a hurry from that point of view. Their stock market has been doing pretty well. The economic numbers are starting to look a little bit better. The stimulus started about a year ago. It's working its way into the economy. The Chinese government is being more supportive of the tech industry in other places. The PBOC can probably afford to wait, especially with the yuan in a good position as well. They're getting help from the fact that the US dollar is a bit weaker. That's helping their case with a stable currency as well. So from lots of points of view, the PBC can buy a bit more time. You can bet that they're ready. If conditions deteriorate, you can bet they would see what's going on and they've got room to lower. I don't think they're in a hurry to do so. I think they're happy to watch things for the time being.
They definitely have kept the powder dry for some time, right, Mark?
Yeah, I mean, they haven't made any major changes for several months, and yet equity markets continue to perform. It hasn't affected the general sentiment towards China. So the one thing that is changing a bit, of course, is the shape of the yield curve. You look at the Chinese government bond curve, it's been steepening. They're probably not too unhappy about that because it did get a bit ridiculous. Earlier in the year, you had yields so low, especially in the 30-year sector. That was actually a risk because from there, what can you do in terms of stimulating your economy? So that backup in yields is probably good from the PBOC's point of view.
Great perspective, Mark. Thank you so much for that. Bloomberg MLive strategist Mark Cranfield here in the Lion City. Still ahead this hour, President Trump links Tylenol to autism and urges pregnant women not to take it. We get reaction from the Australian Medical Association next. Keep it here with us. This is Bloomberg.
So taking Tylenol is not good. All right, I'll say it. It's not good. For this reason, they are strongly recommending that women limit Tylenol use during pregnancy unless medically necessary.
President Trump urging pregnant women to avoid Tylenol after linking its active ingredient Acetaminophen to autism, despite the lack of widely accepted scientific evidence supporting the risk. Acetaminophen is known as Paracetamol in other parts of the world. Let's get perspective from Julian. Dr. Julian Rait, Vice President at the Australian Medical Association. Dr. Rait, good to have you with us. I mean, should I be concerned? I think I have 2 bottles of Paracetamol in my bag.
Well, as far as Australia is concerned, Haslinda, I don't think this changes anything at all. I really do think that the President's advice has raised unnecessary alarm for women who are pregnant. Certainly the Australian regulator, the Therapeutic Goods Administration here in this country, has reaffirmed its safety and said that it remains Category A, which means that it's perfectly safe for pregnant women to use during pregnancy for pain relief and for managing fevers. And I might add that paracetamol has been around with us since 1878. It's been used extensively in various different forms for over 100 years. And pregnant women really should remain confident that it's safe and effective to use during pregnancy. With respect to the claims about autism, I would like to point out that a very large study was completed in 2024. This study was based in Sweden and looked at pregnancies over a 25-year period from 1995 to 2019. And they matched siblings to make sure that the genetic components were similar and found that there was actually no association with paracetamol or acetaminophen, as it's known in the United States. There's no association at all with autism. So while there are a few small studies that retrospectively people have suggested they may have used Tylenol or paracetamol during pregnancy, the large-scale studies, in fact the largest that's ever been conducted, shows that there's no association to be found. Now, that doesn't mean to say that we won't necessarily look at this new evidence if there is some new evidence forthcoming, and I'm sure our safety regulator here in Australia will examine that. But, certainly from what we can see, there's nothing new here that would suggest that we need to change our perspective on the use of this medicine, which has been, as I say, used very safely for over 100 years.
The thing is, Dr. Ray, this warning is coming from the President of the United States. Give us a sense of what might have prompted this concern. I mean, you talk about how studies have shown there's no truth in it, but there have been debates and they have not really been that conclusive as well.
That's true. I mean, as I mentioned, there are some studies that retrospectively have identified perhaps that paracetamol was associated. That doesn't necessarily mean it was causative. It just means that women have recalled using paracetamol during pregnancies where autism has been the outcome. So clearly there Any new evidence needs to be examined, but the weight of evidence to date has reassured regulators, including the Australian regulator, the Therapeutic Goods Administration, that paracetamol should remain Category A and therefore safe for women to use. And I really do think that this latest claim does create unnecessarily alarm. And while it does need to be seriously considered by the regulators, at the moment the weight of evidence would support that paracetamol is safe and effective. We have to remember, of course, that autism has been very extensively studied over very many years, and it's been largely found to be genetic in basis. And, while there are some cases, perhaps 10, 15, 20%, that may have an environmental cause, it's not really been clearly identified what those causes might be. And so certainly we would welcome the opportunity to hear some further research around autism, because we certainly do need to know more about it and find out more about its potential causes. And also we do need to find out how to better support families and to look after children with these disorders, because obviously, it can be very problematic for parents with such children.
Just to be clear, autism is a complex situation. As you said, some suggest that it is genetic, so untreatable. But even then, we're not really definite about that too, right?
Well, there are some small examples where there are some vitamin issues and folate deficiencies and other things that might contribute to some small numbers of cases, and so there are some suggestions around some subsets of autism may be amenable to interventions, but the vast majority, as you say, I agree, Haslinda, are based in genetics and therefore tend to be part of an inheritance of perhaps up to 100 different genes that might contribute to this disorder.
Dr. Rait, help us understand the supply chain of what goes into generic drugs. As far as I understand it, from the little that I've read, most of the ingredients for most generic drugs actually come from China and India.
That's true. Most generic manufacturing is now done in those two countries. But I would add that they are assessed for their safety and efficacy by each individual regulator in the respective countries in which they're used. So in our case, the Australian Therapeutic Goods Administration analyses all products that are made offshore and makes sure that they meet the quality and safety standards that are defined under law in Australia. So, and I expect that in other jurisdictions within the region that would be the same situation. I've been involved with the registration of drugs in a number of different countries in the region, and I know how thorough the agencies are in those respective jurisdictions, and I know they look very carefully at the composition of these medications to make sure that they meet the appropriate standards.
I'm asking because I'm wondering if geopolitics actually perhaps have a part in the warning that we're hearing from the president of the U.S. As the U.S. tries to strike a trade deal with China and India, could this be in play?
Well, I'm not a politically sort of informed person, so I couldn't really tell you whether or not this has a political perspective. All I can tell you is that, paracetamol or Tylenol has been shown to be safe and effective for use in pregnant women who have fever or pain. And in fact, fever can be deleterious to pregnancy. So, of course, it's important to treat it. And to date, we really don't have many other alternatives. Certainly aspirin or ibuprofen or related products aren't suitable to be used in pregnancy. So paracetamol or Tylenol is really the only option we have. And so I think that rather than not treat pains and fevers in pregnancy, I think that we should continue to use paracetamol with confidence.
Do you see a fallout from President Trump's proclamation, and how do you see doctors around the world dealing with it?
Well, I think that they'll first approach it with an open mind. They'll look at whatever evidence that's being produced that's new and analyse it, and obviously consider other studies that have been done, including the very large one that I mentioned that was published last year, and then provide appropriate advice to patients. Obviously, if women are concerned about this latest advice, I would encourage them to speak to their family practitioner about this issue, or their obstetrician and gynaecologist, to ensure that they actually have all the information necessary to make an informed decision of their own. And that includes, being briefed about what the actual evidence is.
Dr. Rait, President Trump also took issue with the vaccinations of children. He says that they should be spread out. Is there a reason to be worried about this? Is there a reason to think that what's been implemented so far shouldn't be continued?
Not at all. I think that vaccination is one of the safest interventions we have in all of medicine. In fact, I remember working in the region. I think I was in Vietnam at the time, and speaking to the health minister there, who said it was one of the most effective things he'd ever deployed. And, I fully agreed with him at the time. And throughout our region, vaccination is a very important way to prevent illness and death. And so I think for people to cast doubt upon the efficacy of vaccination is not helpful.
How do you see major medical associations responding? Should they be issuing guidelines on how paracetamol, Tylenol should be consumed or not?
Well, it's not necessarily the role of a medical association to provide that advice. In Australia, as I said, we have a Therapeutic Goods Administration, a properly constituted organisation with trained doctors and scientists who are familiar with the literature and know how to analyse new evidence. And I think that in each jurisdiction, people need to look to their similar organisations, because it certainly seems that the evidence that's been currently obviously promoted may not be consistent with what's already established in this area. So I would sort of suggest that the regulators in various jurisdictions should make the advice clear.
And as we await for further clarification and evidence, what should we be looking out for when they come along?
Well, I think the size of the studies is very important, and also the methodology used. And of course, the regulators are used to looking at these things and making sure that they're properly peer-reviewed.
Dr. Rait, thank you so much for your perspective today. Dr. Julian Rait, Vice President at the Australian Medical Association. We have some lines out of Thailand right now. The Thai government planning short-term stimulus and moves to stabilize the baht. Of course, this is an economy that's been settled with lackluster economic growth. The Thai government's actions will include handouts. That's according to the ruling party official. Of course, we've heard about these handouts, but they have not been implemented because of the uncertainty in the political situation in the country. Still to come, Sino Auto Insights weighs in on the outlook for Asia's EV sector after Warren Buffett reportedly sold his entire stake in BYD. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Less than a week into his tenure as a Federal Reserve Governor, Stephen Miran is making his case for aggressive rate cuts. Speaking to Bloomberg at the Economic Club of New York, the Trump appointee told us why he wants a total of 150 basis points of easing this year.
I expect the second half of the year and into next year to be better in terms of growth than the first half of this year, in large part because a lot of the effects of the tax bill are going to be kicking in and trade uncertainty is dissipating. But I view a lot of that as also expanding the supply side at the same time as the demand side. And so as I said, if actual output and potential output are moving out at the same time, it doesn't imply a necessarily hawkish or much tighter policy because the output cap isn't expanding if they're both moving out at the same time. Instead, my view is that policy is roughly 2 points too restrictive, which is considerably restrictive. And even though I am expecting growth to be a little bit better in the future, that could get derailed unnecessarily so and create an output gap where one need not exist if we don't get policy closer to neutral. Now, that said, because of the distance to neutral, my view is it's better to move there more quickly than less quickly. It's not a panic, I think a panicky move would be something like 75 basis points or even more. I'm not panicked. I just see that the risks grow the longer you remain significantly above neutral.
You have company among your new colleagues at the Fed in your neutral rate forecast, but nobody wants to move quite as quickly as you do. What is it that concerns you about the labor market?
Well, we learned that the first half of the year was not as strong as we would have liked it to have been. We learned that the labor market continued to lose momentum throughout last year and into the first half of this year. And that, to me, means that even though I think that growth is going to pick up for various reasons, there are concerns that, hey, things had been moving in the wrong direction. And if you keep policy this degree of restrictive for too long, you're not going to allow things to move in the other direction. And so you're going to create a situation in which an output cap expands. And so in my opinion, it's imperative that we get closer to neutral quickly. And so I thought sort of a series of 50s to recalibrate interest rates was the appropriate policy.
And you don't see that as panic?
No, I don't see that as panic. I mean, if I were panicking, I would tell people I were panicking.
All right. A lot of businesses say that, you talk in your speech and just now about how rates are too restrictive, but a lot of businesses that I've been hearing from, reading different reports and analyses, show that some of the pullback in investments is not due to the restrictive rate environment, but has to do with policy-related uncertainty. How do you counter that?
Well, I mean, I think that, there's a lot of different interest rates in the economy and a lot of different types of investment. And so for sure, there are parts of the economy that have been affected by that. And as I said before, I do think that type of uncertainty is not totally gone, but I think it's certainly less than it was a few months ago. However, if you look at other sectors like housing, I think it's very clear that rates are the primary impediment to investing in housing and building more housing at the moment. I don't think that that's a function of trade policy uncertainty.
And that was Fed Governor Stephen Miran speaking with Bloomberg's Saleha Mohsin. In other news, China's export sector has surged despite 5 months of U.S. tariffs, pushing its trade surplus this year towards a record $1.2 trillion. Manufacturers remain defiant, with exports to India hitting an all-time high in August and shipments to Africa nearing a yearly peak. That's triggering concern around the world as governments weigh domestic industry risks against the cost of antagonizing Beijing. And EVs have been a big part of China's exports. We're keeping an eye on shares of BYD under pressure for a second day after a report that Warren Buffett's investment firm offloaded its stake in the country's biggest EV maker. CNBC reported that a filing by Berkshire Hathaway Energy, the subsidiary that held BYD's shares, listed the value of the investment as zero as of March 31st. Buffett's firm held the stock for more than 15 years as it surged over 4,500%. So, are investors losing interest in the Chinese EV sector that now dominates the global market? Tula is managing director of auto consultancy Sino Auto Insights Tu. Good to have you with us. Thanks for joining us. I mean, we're quite used to Berkshire Hathaway scaling back its investment in BYD, right? I mean, we've seen it do that since 2022. But to make a total exit, what are you making of it?
Well, I think he's had it for over 15 years, as you had mentioned, with a 4,500% return. So I think he did really, really well. And if I'm being honest, there is more competition for BYD. I think they've had, for the last couple of years anyways, in the China domestic market, their way with that market. But we're seeing companies like Geely and Chery kind of bring products, especially in the mass market below 200,000 RMB price point, to the market that are actually pretty competitive versus some of BYD's best products.
So given the competition that you're talking about, has BYD peaked? It's now undergoing a slowdown?
So the denominator is much, much larger than it was 4 or 5 years ago. So from a percentage standpoint, year-over-year growth, that was always going to slow down. That was inevitable. But I was just at IAA in Munich a couple of weeks ago. You know, Stella Lee was on stage. She was very confident. She had talked about being in 32 markets. Let me correct that, 32 European markets, over 100 markets, and really doubling down on their commitment to the European market in Europe for Europe. So I do see some hiccups just as they recalibrate their domestic strategy and try to coordinate that with their international strategy. But they're a machine, and they're going to continue to grow.
So don't worry, even though we're seeing the slowest annual growth rate in about 5 years, because things will pick up, things will gather pace, there is momentum in growth?
Well, they're also going to be manufacturing locally in a lot of these markets, Southeast Asia, South Asia, Europe, and Latin America or South America and Brazil. So they're going to continue to grow, whereas some of their other competitors in the China market that want to go abroad, they're still mostly going to be manufacturing from China. And with protectionism increasing in Brazil and Mexico, in other parts of the world, that could be a really huge restriction for those companies, which would also provide BYD a bigger opportunity to grow abroad.
Let's unpack some of the markets that you're referring to. Europe is one. It is gaining ground. How important is this market? It's also competitive, isn't it? I mean, it is lagging behind some of the players already there, like Volkswagen, for instance.
Without the without the U.S. market, that's effectively off the table for most Chinese EV makers for now. The European market is linchpin for BYD if it's going to hit its ambitious goals for the future, and that's 50% of all their vehicles sold outside of China. If they hit 4 million units sales in China this year, a little over 4 million units, if they didn't grow any further in China, that would mean they would need to sell 4 million units outside of China. And that's 8 million total. Toyota sells 10 million. So again, there's no other markets like the US, China, or European Union from a volume standpoint. So European Union is linchpin for BYD if they're going to reach their goals.
And of course, they see a lot of promise in the Indian market. BYD, as well as Tesla, battling it out. Both won expansion plans, but both seeing a lot of challenges. How do you see BYD and Tesla playing, and how successful can they be in a market like India?
So with India, it's an emerging market. So average MSRP or manufacturing suggested retail price are much lower than they are in Europe and in the West. And so this is really BYD's, this is where they live. They live in the sub, $20,000, $30,000 price point. Tesla is going to really have to bring an alternate vehicle or product to the Indian market if they want to sell in the quantities that they're hoping to compete with BYD. And so I think that's kind of one of the biggest challenges for Tesla, is really coming out with a fully featured Model 2, not a Model 3 that's decontented or a Model Y that's decontented, but a fully featured Model 2 or a smaller model that can compete directly with BYD's best products below 200,000 RMB.
The caveat is that India is a tough market to crack, too. Thank you so much for that. Tula, Managing Director of Sino Auto Insights. Coming up, the Union Bank of India unpacks how President Trump's $100,000 H-1B visa fee is impacting ties between New Delhi and Washington. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Super Typhoon Ragasa has lashed the Philippines and Taiwan as it heads towards southern China. Over 10,000 people across the northern Philippine island of Luzon had to leave their homes ahead of the storm. There were no immediate reports of casualties. The storm is now churning towards southern China and is set to sideswipe Hong Kong. Ragasa is packing maximum sustained winds of 230 kilometers per hour. The city is bracing for potentially widespread damage and disruption. Hong Kong flag carrier Cathay Pacific is cancelling more than 500 flights as the city braces for its worst storm since at least 2018. Let's bring in our Asia transport correspondent, Danny Lee. And Danny, to be sure, it's not just Cathay, right? I mean, it's impacting the likes of Qantas, China Air, Tiger Air, and the likes as well.
Yeah, every single airline operating in and out of Hong Kong, whether you're a local or foreign airline, will stop operating for 36 hours from 6 p.m. on Tuesday. And we've already seen a whole slew of flights, even before this time, being cancelled by Cathay and others. So there is quite widespread disruption. And for a major airport hub like Hong Kong, which already carries and handles around 200,000 passengers a day, the fact that this 36-hour level of disruption will extend effectively beyond that gives you a sign of the kind of challenges passengers and airlines are having to deal with this travel chaos. But on a more kind of human level, just this storm, the barreling towards Hong Kong and southern China, is a very serious and threatening one that is around 400 kilometers away right now and continues to retain its maximum strength, currently around 220, 230 kilometers an hour. Authorities in southern China, in Shenzhen, have been evacuating up to 400,000 people. You do see the level of transport disruption, not just in Hong Kong, but in Shenzhen, Macau, and across Guangdong, trains are being suspended. So, there's a lot of preparation going into this to hunker down, and whether it's in the education sector, transport, or even the financial sector, there is a lot of disruption wherever you look.
And airlines are not taking any chances. From what I understand, unused carriers, unused aircraft also being flown out of Hong Kong.
Yes, and we've actually seen aircraft already being flown empty outside of Hong Kong. So far, we can see planes being sent to Da Nang in Vietnam, for example, as far away as possible, but close enough so when the restart and recovery operations can get underway sometime Thursday in the daytime, that it can be done quickly, because that is a challenge. I don't think airlines, in discussion with them, they want to send all of their assets outside of Hong Kong, but they want to minimize the risk for these multi-million-dollar jets. And so, it's going to be a tense couple of days as we see this ramp up of this storm. So far in Hong Kong right now, the skies are clear, the heat and humidity is still around. We haven't seen the rain and the winds yet pick up, but we are going to see the third highest storm warning, typhoon warning, be raised from around 2:20 this afternoon. But that will be the sign of a more challenging evening to come in Hong Kong.
And Danny Lee taking a break from his globe-trotting. Danny, thank you. Bloomberg Asia transport correspondent Danny Lee there. Now, here's a look at Indian markets as it opens for the trading day. We're keeping an eye on shares of Adani Power. Sources tell us that GQG Partners has sold about 1% of its equity in Adani Group's power unit. In a $250 million deal, SBI Funds and Citadel Securities were said to be among the buyers in the open market deals, in which 35 million shares were sold in the range of 610 to 625 rupees apiece. The sale represents a near 100% gain on GQG's average purchase price since it began buying the shares in 2023. Of course, we're also keeping an eye on tech stocks on the back of that sell-off we saw yesterday, which drained about $10 billion in market value from tech stocks as a whole. Now, staying on India, some economists believe President Trump's steep hike in H-1B visa fees could hurt the country's services sector, curb remittance inflows, and weigh on the rupee. Citigroup economists note highly skilled Indian migrants in wealthy nations are a vital source of cash for New Delhi, with the U.S. alone providing nearly 28% of the inflows. That amounts to roughly $35 billion a year. Trump last week ordered a sweeping overhaul of the H-1B visa program, mandating a $100,000 application fee aimed at deterring excessive use. But there seems to be a silver lining. Wall Street banks are set to increase hiring at their India-based business support centers following that hefty fee hike. U.S. lenders, including the likes of Citi, JP Morgan Chase and Goldman Sachs, are among the biggest employers of India's so-called global capability centers, which have become $64 billion market, according to figures from EY. Let's discuss the economic risks and opportunities from the H-1B visa fee hike with Kanika Pasricha, Chief Economic Advisor at Union Bank of India. Good to have you with us. First off, Kanika, what's your take on the cost of this H-1B visa?
So, Haslinda, first of all, thanks for having me here. 3 points. See, first and foremost, the H-1B visa affects the visa holder more than the IT services company or the GCC, so to say. And see, what's happened is since Trump 1.0, we've seen IT companies become very agile in the way they're working. So they have a 70-30 or 60-40 sort of a ratio of offshoring and onshoring. So a lot of businesses already shifted back to India, and they're in a comfortable position. That said, the numbers that you gave, completely agree. Pre-COVID services trade surplus for India was around $80 billion. Post-COVID, in fact, till last year, that services trade surplus has jumped to around $190 billion. So from a macro perspective, this is an important driver of current account dynamics. Even though the IT companies will be able to escape the losses because they've been very agile in their approach, some H-1B visa nationals may get affected. So the silver lining here is, given Indians are known for their innovative, high-skilled, technical skill quality perspectives, I'm sure they'll have alternatives to consider as well. But very important, the bottom line remains, in the short term, the impact may be muted because the lottery for this year is over. But yes, in the medium term, given that the trade tariff war has shifted from goods to services, right, from a broad macro framework, the impact needs watch. It's a risk. Thanks.
It is a risk. It is an industry worth about, what, $250 billion, and it's been linked to India's ability to actually send its talent overseas. Do you think India is losing its competitiveness, its competitive edge on the back of what Trump has done?
So there are 2 to 3 things to consider here, Haslinda. First and foremost, it's not just India, it's for every economy in the world. And this is an opportunity for India to look at its new export markets as well. We don't lose competitiveness. We choose different trade partners or export partners because we are competitive in a certain product where we contribute to, we're like a leader in software services trade across the world. So we'll just find new partners in this case. That's one. Second, it's very interesting in the way the global chessboard is playing out, right? So on one hand, for India as well, from the export part of chessboard, US has 18% share contribution in our exports. From the import side, China has 18% share contribution. We are trying to negotiate at both ends now, if you see, with the way the developments have happened over the past few weeks. So let's see what the outcome is. For specific sectors affected, like textiles, gems and jewelry, the authorities themselves are speaking to many other export markets as well to look at how to diversify the export portfolio. I would say something good will come out of it. Maybe not a short-term, maybe some short-term pain, but a long-term gain. Thanks.
Some reports suggest that for the IT sector, we're seeing a margin erosion of 6 to 7%. First, do you agree with that? And two, secondly, how do you counter that? How do they counter that?
So I would say, Haslinda, you're absolutely right. For the IT sector, in fact, since the last few quarters itself, they have clearly acknowledged that there is some impact on margins, profit margins, some impact on demand as well. even as they enter 2025, and that's a part of their quarterly guidance. How do you counter that? I would say in the short term, when the overall demand slowdown is there from the global economy perspective, because their top export partners are US and Europe, US, Canada, and Europe. So that hit may come in this year when there's so much uncertainty, tariff negotiations happening. We may see some impact in the short term, but in the medium term, what kind of a resolution we have? So we may start with a $100,000 H-1B visa hike, but where we actually end up, because it may be some sort of a trade deal negotiation tactic as well. This may not be the final outcome. So where we actually end up will be equally important to understand as well, to determine the precise point, precise impact. Yes.
So there remains all the uncertainties. I'm just wondering whether, at the end of the day, we still have to review the growth projection for India for the year.
So two aspects. Completely agree. As an economist, we have to acknowledge this is an uncertain year. And this is not just our projections. The chief economic advisor recently has made a comment that the trade tariff war, and this is before the H-1B visa impact, he made a comment that trade tariff war over the next 4 quarters is likely to lead to shave off 60 basis points from GDP growth, while the GST reform, I would say a very timely GST reform, is expected to add 30 basis points. So the net impact may be 30 basis points in terms of GDP growth over the next 4 quarters. The only thing is, as we see in India, and we've seen it in other Asian economies as well, growth in first quarter of the year, April to June 2025, was front-loaded. So India clocked 7.8% GDP growth. So last year, we grew at 6.5. This year, just statistically, even if there's slowdown in the coming quarters, we are tracking close to 6.7, 6.8.
Kanika, just very briefly, what do you expect the RBI to do? How much more cuts, easing, are we anticipating?
So after our prescient call on a hold in August, we had even that time pinpointed about at least another 25-50 basis points rate cut. As you rightly said, that there can be a growth hit after front loading in first quarter, with inflation projections also coming down sharply. So we started with 4% at the start of the year, the MPC's projection. Now our currently tracking inflation projections are around 2.5%. I would say the range is 2 to 2.5%. Right.
Kanika.
Because GST may shave off 60 bits. So October is a live policy. If not October, by December, expect a 25 basis points rate cut. Thanks.
All right. Kanika, thank you so much for that. Kanika Pasricha, Chief Economic Advisor at Union Bank of India. Before we go, here's a look at tomorrow's show. We'll get fresh analysis on the outlook for AI and tech. And this has been Insight. Keep it here with us. This is Bloomberg.